Hello everyone, welcome back to Upside Down Data. Today I want to talk about Harmony. Is momentum returning? If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So to start off the video, I wanted to show you the momentum bias indicator, or MBI, that is an indicator we have on the channel, and apply it to one and see what it makes of one's recent price action. So if you're not familiar with the MBI, essentially it assesses whether or not there's a positive or negative bias in momentum in the market. What I mean by momentum bias is kind of these times when there's this positive, overwhelming momentum that really pulls price up along with it, or this negative prevailing momentum that drags price down along with it into these corrections or more bearish phases. So the way you can read the y-axis here is that 0 is the average momentum bias, and because 1 has been appreciating over time in value, this is a positive value here, a positive momentum. And then the values up above and below are demarked in standard deviations. So 1 would be 1 standard deviation above the mean, negative 0.5 is negative 0.5 standard deviations below the mean. And so essentially 0 is kind of this expected point, and then anything above that would be kind of this positive momentum bias. Anything below that would be this negative momentum bias. And you can see that throughout one's history, when we get into these times when momentum bias pops above 0, it can really pull price up along with it. But then when we come back down below 0, it can pull price back down into these bigger corrections that we've seen, or here, pulling price down along with it. So yellow is the price of one across time. The white line here is the momentum bias indicator across time. So what can this say about one's recent price action, what it's currently been doing? I think there's some interesting things that we can note. So the first thing that we can see is that the MBI had actually caught a reversal point at a relatively similar point to where it has in the past, right? This negative 0.5 standard deviations below the mean has seemed to act kind of as support oftentimes for one throughout its history in terms of momentum bias. So whenever the momentum bias gets that extreme to the downside, oftentimes that's been a local bottoming point. So it'll be interesting to see if that ends up happening again. Now you'll note that we're not above 0 yet, and so from this indicator's perspective, it thinks that momentum is returning to the market. It's just that we haven't really achieved that positive momentum bias like we have back here that might set us up for a bigger move up to the upside, coming up like this, or coming up all the way like this, or even from here all the way up through here, for example. So certainly this is a good first start, right? This is what we'd like to see, that momentum is returning to the market. The momentum bias is being relieved from this kind of oppressive negative bias. We're moving towards positive. And what I'm going to be watching for personally is when we get up to around 0, are we able to break through and really establish a positive momentum bias? Or do we get rejected off of 0, like we have more or less here, which have tended to denote kind of a failed breakout, and then more downside oftentimes is needed before we can start pushing back up to the upside. Or you could say, again, here is kind of one of those failed breakouts above 0. So it'll be interesting to watch and see, but I think that'll be pretty diagnostic, in my opinion. If we can convincingly break above 0 here, and if price is able to continue appreciating, that could suggest that we're going to get a more extended breakout to the upside. Whereas if we get rejected around 0, that could be a bearish sign that maybe more downside is likely, or at the very least kind of sideways consolidation from there. So I think we're a little bit too early, and also a lot of this, of course, is going to depend on the broader crypto markets. If the broader markets stay bullish, and then more momentum comes in the broader market, and then especially if momentum then continues to come into into the Harmony market, that could be a really great boost that could push momentum bias up to the positive, help one really realize some upside in the future. We'll have to see, but that's what I'm currently watching. So my current impression of this data is so far so good, but it's a little bit too early to know definitively if we're ready for another one of these. I think we're going to have to wait a few more days, weeks, to see how this reapproaches this 0 point and how it interacts. I think that'll be diagnostic, but so far so good. This is a hopeful sign so far. So the next thing I wanted to talk about then was to flip over to our risk indicator, the upside downside potential indicator, which we talk about a lot on this channel. So I'm showing you here the long-term UDPI, which cares about moves that play out over months to years. So these broad or macro cycle type of moves. And I'm showing you here the price action of one across time, color-coded on the output of the UDPI. So red is high risk, green is low risk. So what you can see is that across time, again, the UDPI, and the interpretation of this, of course, is different than the MBI. UDPI is about risk. It's about saying, has the downside potential likely been exhausted? Has the upside potential likely been exhausted? In these kind of green zones, that tends to prestage these big moves to the upside. Red zones tend to prestage moves to the downside here. And so what we can see is that we had this nice run up coming out of the summer, getting up to these higher, more elevated levels of risk, kind of around the 2 level. And then we have just been kind of sideways ever since, more or less range bound off of this point ever since, with risk falling. And I think we can see a little bit clearer what's happening if I just flip to the raw output here for the long term. So replacing the y-axis with a risk level. What you can see is that we had reached a level a little bit above 2 on the risk level for the long-term UDPI. So in its mind, 1 could have continued running from here. There was still realistic upside potential that was left. But of course, the broader markets got bearish at that point. That brought 1 down along with it. In some ways, it was actually really impressive what 1 was able to do coming out of December, being able to put this much of a move to the upside while the rest of the market had largely just been going down. I think this was actually a pretty impressive move it was able to do back to the upside here to get back to that point before. But essentially, this is kind of the point at which we got rejected to the downside. So 1 was able to realize a good amount of upside potential. Could have potentially been more if market conditions had remained bullish, but they didn't, and so we ended up falling off of that point. And now we're kind of ranging between -1 and 0 in the long-term UDPI for 1. That the model thinks that overall there's more upside than downside potential for 1 that's realistic in the coming months, but it's not totally flipped into the bullish side, right? It's not down here. So there is realistic downside potential that it sees for 1, but there's also a good amount of realistic upside potential. So I think that is quite hopeful in a lot of ways. And one other thing I think is interesting to look at here is to compare the long-term UDPI for 1, which is in this the white line or white grayish line here, to the UDPI for ETH, which is in green over that same time period. And one of the things I think is interesting to look at here is this kind of decoupling, or kind of at times inverse correlation that 1 has shown with Ethereum in the past. And the reason I think this is interesting is because a lot of people talk about with alternative layer 1s, a lot of people say, well, why would you buy alt L1s if you could just buy Ethereum, right? Like, they say, well, if things aren't outperforming Ethereum, why wouldn't you just buy Ethereum? And I think, I'm not saying that Ethereum does outperform 1. To the contrary, 1 has quite explosive moves against Ethereum that it puts in. What I think is more interesting to look at, though, is to see when Ethereum is realizing its upside potential. Is that when 1 is also realizing its upside potential? Or are there times where they're actually doing it out of sync? Because that might suggest that there are opportunities where being Ethereum is not advantageous, that you'd rather be in 1, but then also maybe some times where you'd rather be in Ethereum than in 1 when they're going against each other. So I think we can see that pretty clearly when we look at some of these points in 1's history. I think one of the clear ones stands out here in this huge run in early 2021 going into the spring, where we had Ethereum had moved more quickly. It had moved sooner, realizing a lot of its realistic upside potential. And then it had just kind of peaked there, and it kind of was stuck at that general level, or corrected a bit off of it. And then that's when 1 then took over and started really running to the upside. So while Ethereum was not realizing upside potential, 1 was doing so and was really exploding to the upside. But then as 1 was coming back down, Ethereum came back up. And then likewise, as we got into this point here in the more recent rally, Ethereum moved a little more quickly in realizing its upside potential, but then started coming down while 1 was still realizing upside potential. And so I think that's just a really interesting thing. And you can note also that Ethereum has been correcting quite hard recently. 1 has actually been holding up a lot better than Ethereum more recently. And you can see that just in the price chart, right? Ethereum has fairly precipitously moved to the downside. 1 has more or less been able to hold its ground in this general range that it's been establishing. And so that's an interesting divergence again that's happening, where 1 has been actually able to hold on to its upside better than Ethereum. Ethereum is realizing more of its downside potential than 1 has been in these recent days. So I think this just puts more nuance in that whole discussion when people are always saying, oh, well, why don't you just buy Ethereum? Ethereum is just, Ethereum is what you should buy, et cetera, et cetera. Well, I think it's a much more nuanced perspective. I think people who say that are not taking a full accounting of the data, because, there probably are going to be times when owning Ethereum is better because assets don't always move together. But I think this suggests that there are times when owning Ethereum has been better, but then there's times where you might have been wanting to switch back into 1 and vice versa, that they're not one versus the other, and it's not that always owning one over the other has always been better. So just something interesting that I thought I wanted to make note of, that I think in some ways one and Ethereum have been kind of complementing each other over time. It'll be interesting to see if that happens again in the future. So to wrap up, I just want to show where the different time frames of the UDPI stand for one right now. So I'm showing you the long-term UDPI, medium-term UDPI, and short-term. Medium-term cares about moves that play out over weeks to months. Short-term, days to weeks. So just shorter time preference than the long-term. What we can see is that, in fact, the medium-term and the short-term UDPI are both more extended to the downside than the long-term. So essentially, in the coming weeks and in the coming days to weeks, the UDPI is quite bullish on one, especially in the short term, right? Being down at negative 2.29, it's quite bullish that in the short term, most of the realistic downside potential has been realized, and then the realistic upside potential is more expected. And one of the things that Joe has noted on some of his videos, I think is just interesting, is that sometimes when you see this dislocation between the different time frames, and especially when the short term is outstripping the medium term, for example, or the medium term is outstripping the long term, that can suggest a bottoming point. That when you see that kind of action where the short term downside potential is getting sucked up really quickly and it's outstripping these time frames, that can be an indicator that a bottom is likely to form, especially when you catch a bottom on the short term. We've caught that bottom, so it'll be interesting to watch and see what happens if this really does end up being the bottom for one, or if more downside could come, because that certainly could happen. There's realistic downside, but plenty of realistic upside potential in the coming days to weeks. All right, so none of that's financial advice. You should form your own opinions, but that's my interpretation of the data. Is that in the long term, in the coming months, the model's a little bit more undecided. It thinks there's realistic upside or downside potential, but when you move to the shorter time frames, it thinks that upside is maybe a bit more realistic than downside. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI and the MBI, we're all gonna make it.